Welcome back. Madhav Nadkarni, the CFO of Unity Infraprojects, joins us. Madhav, we hear a lot of telltale signs of orders not coming in. Even the biggest of the big complain that order books are not growing by maybe at best by 5% or so. What's the situation? We got a couple of bits of news that you got an order from Adani Township, you got an order from Engineers India. June 1st, your order book was 3,600 crore. Where is it now?
Yeah. At present, it is almost 3,800 crore, and we have a L1 position of 1,550 crore. So this year till date, we have already announced around 1,500 crore orders, and again 1,500 L1 is awaiting to convert into order book.
Are you reasonably sure of the ability to execute all these orders? Because the other complaint that Larsen & Toubro made, no less than Larsen & Toubro, is that about 50% of orders granted were not executed for whatever reasons, financial or other decisions taken by those who gave the orders. Are you witnessing any trend like that?
No, see, basically 76% of our orders come from government sector, and 24% comes from private, and predominantly private, considering the economic situation, sometimes hold on the brakes, and as far as execution can be slow. But as far as government orders are concerned, we in past also we have never faced such issues, and going forward we are hopeful, because once projects kick off, then there is hardly any issues faced by us.
Lower construction expenses have actually showed up your margins in the quarter gone by. We've seen about a 200 basis point improvement. Do you expect to hold those margins and have price escalation clauses being built into your contracts?
Yeah, 94% of our contracts are having escalation mechanism. So, and a question on margins, definitely raw material prices were subdued. There was no much impact overall other than diesel price indirect cost wise. So we were able to hold on the margins, and definitely going forward we don't anticipate much improvement in raw material costs. So definitely we should be in a position to maintain the EBITDA margins.
High working capital has actually been an issue, and there's been a sharp rise in terms of interest costs of almost 80% in Q2. What's the outlook on that?
Yeah, we are working on working capital management. In fact, September balance sheet numbers will indicate about that. We have reduced our inventory days, we have reduced our debtor days, so dedicated efforts are being made on that. But as far as interest cost, definitely is a concern, the interest rates, the way they have increased. So we are working on improving working capital management to control the interest cost.
So you were operating at a 250-day cycle at the end of Q2, if I'm not wrong. What's the internal target, by the end of this fiscal?
Yeah, as far as overall working capital, we are bringing it down to around 180 to 200. But specifically taking into account inventory from 30 days, we will be bringing it to 21 days. Debtor days from 75 to 90 days, we are bringing to 60 to 75 days. So these are the two main parameters which special working or dedicated efforts are being made.
Okay. What do you think you will manage by way of a revenue growth in the current year? Your Q2 indicated about 12%. Will you do better than that for the full year? Is that kind of visibility you have on FY13?
Yeah, initially we were, correct. Initially we were targeting 25% growth, but we are still sure of 20 to 25% growth for entire FY12, and similar 25 to 30% growth on FY13, because we are targeting around 5,000 crore fresh orders during this financial year, which justifies 25% growth as far as financial year 13 is concerned.
Okay, the audio level is swinging like the markets are too much of swaying. We'll leave it at that, Madhav Nadkarni. There is a problem with the audio. Thank you very much for joining us with those details.